In this video, I'm going to teach you how to buy a house as an entrepreneur and why this strategy is remarkable. Will change your entire tax structure. So in this video, we're going to talk about the 5 things that you need to prepare to buy a house as an entrepreneur. We're going to talk about the loan and the money. And almost as critically, we're going to talk about a few things you're kind of left to the wolves, I say, when you don't know these things. So get a pen and paper. There's a lot of content coming up. Okay, the first thing as an entrepreneur, let's talk about your structure. So number 1, you're an entrepreneur and you want to buy a home. So that means you probably have an LLC. And if you don't, 2 years before you think about buying the house, you should have the entity set up. See, here's the thing for you sole proprietors versus, corporate like LLC, S corporation owners. If you're just a sole proprietor, you have one credit score. You have your credit score attached to your Social Security number, and your sole proprietor is right along with it. There's no distinction to the financial institutes. So if you're going to apply for a loan as an entrepreneur, you need to become an entity because that entity can get its own credit score. So now there's you, your Social Security number with the credit score, and there's your entity with its own tax ID number. So now there's 2 kind of applying as a way to think about it. It's not exactly legally that way. It's just an easy way to think about it. And then you want to build that business as fast as you can. It's why I promise $100,000 in 365 days to my new students that really want to go for it. Because now we can load up that LLC or S Corp or C Corp business, and it truly has its own credit score and it's got a great P&L. Because a lot of times with entrepreneurs, and you're just a sole proprietor, the financial institutes, the banks, your lending officer, they're going to look at that and say, and that's it? And you haven't had the tax deductions and all the other benefits you could have as a company. So 2 years out as an entrepreneur, get incorporated for your business and jam. Let me help you get that business to 6 figures. The other thing you want to really pay attention to during those 2 years is your credit score. Your credit scores are critical. So if you blew it and you have a big background of all sorts of issues, I have the most amazing woman who will clean up your credit. And you're just going to have to start. Some of you have been avoiding it for years. You just got to start where you are. So clean up your own credit. But the good news of having your own company is there's ways to take that company to really great links of good credit scores. So now you have 2 credit scores that the lending officers can look at. You have yours, you have your company's, you have your P&L, you have a business plan for projected new revenue. It's just a different way to go into the lending process versus, the easy way. So if you're employed and you have a nice income and you've had consistent, paychecks, you just submit your paychecks. It doesn't work that way as an entrepreneur. And a lot of people, and if you're one of those employees out there and you're not wanting to leave your employment because you don't think you can buy a house as an entrepreneur, completely the wrong advice. You absolutely can. I have never relied on my employee income to ever buy property. And I've been a real estate millionaire, multi-millionaire since 1999. So the other thing to know is inside of that, there are lenders who really work well with entrepreneurs. So you have your traditionals, and then you have your really good ones who they know being an entrepreneur. They know cash flow variance. They know that it's going to go up and down. They're not asking for paycheck stubs to verify your income. They're looking for P&Ls. They're looking for balance sheets. They're looking for a business plan. They're looking for your sales revenue. So we'll introduce you as we all continue to get to know each other, which, by the way, you have to subscribe to this, get my notifications, hit the little bell. So every day I'm talking to you, so you talk to me. And if you want to talk to me, you go to the comments and go type. Tell me who you are. I need your information. I have a lot of those people. But you're going to be surprised in the financial world how many people are very traditional, just like in the medical world, right? You have traditional and then you have alternative medicine. Well, we're the alternatives to finance. And there's a lot of us that do it, and there's a lot of firms that can help you. All right, but that credit score is pivotal, and getting 2 of them at one time is essential. Now, what's number 2? So fill your reserve funds. So what we mean by that is a couple things, right? And this is really important, especially if you're following my advice implicitly. You're going to be you, your Social Security number, right? You, and a company. So I would encourage you to put together what I'm going to call a wealth account. It's like, it could be a money market account, savings account, but it's an account where when your company's making money, instead of paying yourself, which is a tax, right? It will create a tax situation. You're going to keep the money inside your company. right? So you're going to keep your money inside the company. You'll do as many deductions as you can, but load up that what we call wealth account, right? And as you read my Millionaire Maker book, you're going to start understanding this. So you keep the money in the company so you don't have a tax consequence by paying yourself first. You load it up, you load it up, you load it up. I would load it up to the point where you know you're going to have enough for a down payment. Now, the other side of this is the taxes. So again, to apply for the loan, you're going to have a 2-year tax return. Most likely. So that means you and the LLC up to date on your taxes, up to date on all your payments, so you can actually submit your 2-year tax return. So you'll submit 2 years for you and 2 years for your company. Now, for those of you who are more advanced, you're going to have multiple companies. You do that conversation a little differently. You go to the lender and say, what do I need to provide to you for income? Because I would never load up everything I have if I'm applying for a $500,000 loan. I would apply for what's necessary. So as you grow and you have more companies, I wouldn't put it all up. You don't need to. Ask what's necessary, and maybe you put up 1 or 2 companies for those of you more advanced. But you will need the tax returns up to date and at least a minimum of 2 years. Again, and you're working on your credit score at the same time. And then you got to be putting money away. The benefit is put money into that company account, but in a segregated account, versus pay yourself in a tax consequence. So tip number 4, which is critical, is you have to really watch the income and the deductions that are being taken. So I'm a huge fan, take as many deductions as you can. And remember, your money that you're going to use for a down payment is inside your company. So there's 1 of 2 things you can do, and you got to work with a tax strategist to do this, is you can either pay yourself a gift, you can pay yourself in capital shares, and my favorite is I'm actually the bank. I make the company the bank and I borrow the money, so there's no tax consequence. So say you had to save up $20,000, $30,000 and it's inside the company that you operate, you can take that money, instead of paying you and then you pay, you can borrow the money to you. So instead of it being a tax consequence, it's a loan. And if it's only you have the decision with your tax strategist when and how you pay that back and what interest rate you pay yourself. So again, the company becomes the bank as an entrepreneur to getting your down payment done. So we have some really cool strategies to help you preserve as much income as you can make, reduce your taxes, become a bank, and keep your assets where they need to be. The last is your team. You're going to have to acquire a team. Now, I can just shortcut it all for you. That's what I've been doing for 25 years, is building a team of amazing financial experts around for you to have access to. Or you can go out on your own, but who are you going to need? You're going to need that lender. That's very entrepreneurial. You're going to need a banker. Right? I always want you banking in the right places. You're going to need a bookkeeper, a tax strategist, and then really, once you start getting into more property, you're probably going to need an insurance and trust, depending on what you're doing and what your goals are. So 5 things absolutely imperative to buy a home as an entrepreneur. You can all do it. I want to make it a goal. Some of you, though, I'm going to give you one last caveat before we wrap up, and it's what I did early on. Instead of buying a home, I actually bought a building and I put my entire organization in it. I rented the other parts out, so I actually had cash flow to pay for the mortgage. So I just had a very different asset. So when it comes to real estate, buying a home, buying a building, just being an investor, I see it all as one. There's you, there's your business, and then your investments. So how do you integrate it? How do you use a team? I got them. Cannot wait to show you how. So let me say a little more about the deductions, because, as a just entrepreneur, we want you to do as many deductions and write-offs as you can. So you make your money, you have the deductions, and then your income. So when you work with a smart entrepreneurial lender, they're going to know what that is. They're going to know what your top line, they're going to know the deductions. They're going to see through your cash flow, because they're smart, whether you can afford the loan or not. But work with your tax strategist, make sure that gets tidied up. And then let's go to the other side. Let's just say you're a brand new entrepreneur, you want to buy some real estate, and you don't have any of this history for 2 years that I just talked about. There's this thing called OPM. It's other people's money. The fastest place to find it is in borrowed, go to somebody who has a big 401k. I can give you places where you can self-direct that. They can do a loan against it to you. Actually, if they even work somewhere, they can do a $50,000 loan against their 401k for you, pay them more interest than they have to pay. Money is everywhere right now, right? The SBA has it, lenders have it, other people have it. There is no reason that you ever use money as an excuse to not get what you want, especially buying a home as an entrepreneur. So I want you to click on the link below. Well, first of all, if you really like this, thumbs up. lots of thumbs up if you liked it. I love this. Obviously, I'm a real estate millionaire and an entrepreneur, so this whole conversation, this is like the beginner conversation, just so you know. So you can also comment below and say, I'd like the advanced conversation. I have whole bunch more strategies for more advanced folks. But give me a little thumbs up and then go down in the description and click the link. I'm going to give you a chapter of my Real Estate is Leverage book. It's a 168-page book that I wrote on how I did real estate, how I became a real estate millionaire. And I'm going to give you the strategy chapter, is what's the strategy on how to do what I just talked about. Little reinforcement for you.